All right, hello trading world, and we are back with a pre-market outlook for March 5th, 2021. Coming off of a day where I think we have signs to return to selling. Not quite, but we are on the way. In the last video, I told you about correlation, and we've seen some decent sell side activity, but not quite correlated yet. Picture from the day, we still were 80 declining issues versus 21 advancing. I'm expecting to see way up in the 90s, 90-10, 95-5, 92-8. For us to see some real sell side activity. Everything that we've seen so far is so nice and orderly. It's not real panic type selling. And at some point in time, headed through this correction, I expect to see some panic type selling. All right. Back to the SPY and things to look out for today. It is expiration day, which means in addition to short covering, add rolling and reshuffling positions to the list of things that may give us a pause in the action, or should I say another bounce. Couple things that wouldn't surprise me today. The market makers expected move for SPY is about 370.67. Now, we came a little close. We made it to 371. I wouldn't be surprised if we go to that 370 and take it out and then bounce back up. Especially if we're at the lows in the morning. I definitely could see us going through, taking that low out and busting through that expected move. If we do that in the morning, if you have out of the money puts that are near expiration, that's going to give you the time to roll those puts into at least the front week, so you can have some more time to take some profits. But if we get that down push and we're hovering around the lows in the morning. But like I said, I'm not going to be surprised to see a bounce, because with the little selling that we did, short covering coming, a lot of rolling, reshuffling, that could definitely spark a bounce. And as a level that I would be looking for on that bounce, I'm going to be looking for us to make it somewhere close to we're going to say between or close to this 381 level. Can't draw a straight line for nothing, but we're going to get close to that 381 level, and actually possible to push up or test around this 384. So when we do actually bounce, like I say, if we start off at the lows in the morning, we're going to bounce up here and maybe consolidate. And depending on internals, that may be a great time to kind of re-up on your shorts. If you haven't taken advantage of this lovely sell side activity, this would be the time to jump in if internals are diverging from the price action. And again, looking at this and reading this, if you're in the market tomorrow and we get this consolidation or this bounce, short-term charts are going to be very misleading. It's going to be kind of hard to see what's going on. And actually, let's take that view right now. Let's just look at a longer term chart. All right, now here we have the 3-year weekly, and as you can see, back here in March of 2020, we started on this journey. I have a channel marked out in which we tested the lower end. We tested the lower end of the channel right here, and actually this isn't a test, this is a full-blown pierce where we pierced through. And in an earlier video, I said the moment we close below this channel, that's when all hell will break loose. We haven't closed below the channel yet. So we do have another opportunity to kind of bounce up here and kind of skate around and then give it another try to kind of break through this channel. So that's why I see a bounce coming. With it being Expiration Friday, a lot of this short covering, in addition to rolling and reshuffling positions, that can spark a bounce. So those things I won't be surprised at. Those two things, if they happen. Being that the market maker's expected move is down to that 370.67, if we go through and pierce that, that definitely wouldn't surprise me. And if a bounce was sparked out of all this short covering and reshuffling, that wouldn't surprise me either. And again, look to see what will happen around this 380 or 381 to 384 area. And that will more likely be where we start to see that reversal. But usually when things happen like this, we may not see that full reversal until next week, because we could kind of bounce a good bit, and when we start on our way to corrections like this and in the midst of this sell side activity, some of the most volatile actions are going to be the bounces that occur that break up the sell side activity. So that's going to be a thing to keep your eye on. These bounces, they can be very violent. So that's pretty much a game plan for tomorrow to kind of soften the blow if you're not great at reading internals or just not sure. One of the best ways to take advantage of trying to get on the right side of the short in this market is to use out of the money puts. But you don't want to buy into the hole. You got to make sure that we have some type of bounce first, and in that bounce, when volatility kind of subsides and the puts lose a little bit of their juice, that's when you go in and buy out of the money puts. And that'll kind of help you take advantage of it if you're not already positioned. I think that's about it. During this time, it is especially important that you know your risk and make sure you have everything capped and hedged as best as possible. If you're not hedged by now, I'm sorry for you, but you usually put your hedges on when you're up, when it looks as though you don't need it. And that's usually the time that I'm actually hunting shorts. So when you see us in the midst of this sell side activity, for me, there's nothing to be done except for kind of manage positions, because I hate entering into short positions in the middle of volatility like this or in the down move. So again, be very, very especially cautious and know your risk. All right. Wishing you a profitable trading day. Let's go make some money.